global sell-off intensifying this morning, led largely by techs.
The Dow dropping more than 600 points on Friday, its worst day since May. Japan's Nikkei index tumbling 12%, its worst day since the stock market crashed back in October of '87.
Hey traders, so the markets are crashing at the moment. This has been one of the most dramatic sell-offs that we've seen in years. It's affecting major indices all over the world. But what's actually happening and why? The Nikkei 225 in Japan's down 12.5%. That's the single biggest fall since the 1987 Black Monday crash. The FTSE 100 in the UK is down, and the S&P 500 in the US, as well as the Nasdaq, they're all falling. So what's triggering this sell-off? There's several factors at play here. So first of all, we've got the US recession fears. We had some weak job data coming out from the US in July, which sparked concerns about a slowdown of one of the largest global economies. The US only added 114,000 jobs, which is far below what was expected. Job growth is a key indicator of economic health. Fewer jobs mean that businesses are not expanding or they're cutting back, which could lead to reduced consumer spending and slower economic growth. The Federal Reserve had a meeting last week and decided not to cut interest rates, despite other countries around the world cutting theirs, like the Bank of England. And this is just adding to the uncertainty in the US.
Wall Street sent went up sharply lower, extending Friday's sell-off. That was sparked by the weaker-than-expected jobs report, raising worries the economy may be headed for a recession, and the Fed could have waited too long to start cutting interest rates.
Higher interest rates means less borrowing and less spending because loans are more expensive. This affects everything from consumer loans to business investments, potentially slowing down economic growth even further. In particular, we've seen the tech stocks hit hard as well. Nvidia's dropped 9% and Apple's dropped 8%, especially after Warren Buffett's Berkshire Hathaway has considerably reduced their stakes.
Was the disclosure that took place over the weekend, Saturday, that Warren Buffett has now officially halved his stake in Apple. He's still the largest shareholder.
Warren Buffett's seen as an investment genius, so naturally the people use his opinion as a yardstick. If he's pulling his money out, then lots of other people are going to follow suit. The tech sector can be a crucial driver because it epitomizes innovation and growth. So if that's slowing down, then the rest of the economy is certainly going to be slowing down. So you've got this global economic uncertainty, which can't be fully attributed to the US data, but it does have a trickle-down effect on market sentiment. We've had a recent decision by the Bank of Japan to increase their interest rates. This has surprised the markets a bit and had an impact on the value of the Japanese yen, and therefore impacted the landscape of Japanese imports and exports. It's also worth noting that Nikkei has been rallying in recent months. There are a lot of people speculating that it was overvalued and therefore a correction was on the horizon anyway. Some investors may have just been taking profits, some may have been worried about a retracement. This all contributes to the downward pressure on the index. And now that it's happened, along with these other aspects, you've got this perfect storm, and all the indexes across the world are selling off. Bitcoin wasn't spared from the carnage either. During times of volatility and uncertainty, people tend to sell off their riskier assets and flee to safer assets. So people would have been selling cryptocurrency and getting into things like cash, government-backed bonds and treasuries. Bitcoin dipped below $50,000 for the first time since February. The CBOV Volatility Index, which is often referred to as the fear gauge, has spiked to its highest levels since the COVID pandemic. So we've got a mixture of poor economic data, policy uncertainties, and market sentiment going through the floor. Some people are saying that this is the black swan event that might kick off a global recession. Others are saying that this is just a correction. Let me know your thoughts. Tell me what you think in the comments below. It's so important to trade without emotions, and there's no easier way than automating your trading strategy. I'm not worrying about the crash because my stop loss is kicked in. I've got an automated strategy set up with Algo. You can build, backtest, and run automated trading strategies for free. Go and check it out. Happy trading.